Trader Tim Biggam of Delta Derivatives joins us now for the final trade of the day. Good to see you there in your home base, Tim.
Great to be at the home base too, safe and sound. Hope you are as well, Angie.
Absolutely. We are going to hang in there, Tim. Tell me, what's it like trading from home, especially with the wild and whippy markets right now?
Yeah, the one advantage, I guess, of, trading versus other careers is the ability to transition was pretty easy. I, probably traded at home a fair amount of the time to begin with. So the only thing I'm really missing is the speed and some of the camaraderie of the trading floor kind of environment. But overall, really the ability to trade, not too much changed, but the volatility that we've seen recently certainly makes it, more difficult to trade. Yesterday, especially so, with that kind of up and down, waiting to see what comes out of the Senate and the House, if they do ultimately pass the bill and what it will entail.
It felt busy. It was just that everybody wanted to know, and everybody's waiting for the buying opportunity to come out of this. The market tried to rally, couldn't get enough going here. The VIX, though, had some moments of cooling off.
Yeah, absolutely. Some semblance of sanity, I think, returning certainly to the VIX, which was down. UVXY, which is the levered VIX, down big time. So that was even more encouraging. And I think the fact that even though we finished down, we weren't down monumentally, and we had some back and forth in the market. I think we're trying to carve out some type of a low here, although, the ranges will continue to be very big here. So I'm nibbling in positions and using covered call strategies to further hedge. So just putting a little money to work here, not aggressively. More importantly, going out to January next year, selling some covered calls to hedge the downside, but still leave some nice upside open. With volatility still way elevated, these calls are still richly priced. So I get, for example, in Microsoft, around 135, selling the January of next year 145 calls, bringing in about $15 on that. So having about 11% downside cushion by selling those calls, but still leaving a lot of upside. I kind of like that trade. You don't have to worry day to day. And I think that's key in this market with the back and forth here. I think taking a little longer term viewpoint by selling longer term options makes a lot of sense.
Well, Tim, what about some of the more speculative trades in the market? We saw big moves in Zoom, for instance, and I heard Best Buy was really on the move.
Yeah, absolutely. And you look at even at a stock like Intel and some of the chip makers, where because of everyone having to work at home, desktops and laptops are kind of back in vogue again here. So, but those stocks, if we ultimately, and when we do come out of all this, those will probably be the ones that be hit the hardest here. So I think most of the cat is out of the bag, so to speak, on those names. I'm staying away from them. There may be a little more upside, but given the moves we saw on those, it's almost reminiscent of the overall market move before the big meltdown here. So anytime you go parabolic on some of these stocks, I tend to shy away from them. I'm more of a value player at heart here. And I think value will come into play here over the long term.
Okay, good to have you here. See you soon, Tim.
You bet. Thanks, Ann.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.